Hey there, Trader Tim from E-mini Mind here with some tips to help you improve your trading. Today I'm going to be running through my trades for the last couple of days and walk you through my put position that I currently have going. If you like the videos, please subscribe for more helpful trading insights. So let's start with the daily chart here on the ES. We have a big halfway back short, the 44.97.75. And I say big just because it's, the major swing high to the major swing low, as opposed to like on the way down from our all-time highs, we had some smaller retracements that you could, draw on the way down. Like if you come in here, you have one retracement, two retracement, and so on and so forth. So when you have the big halfway back, that's a bigger, more important level. We had the big halfway back short break from all-time highs to lows, and then we had the halfway back long set up and actually bounce. And when this happened, um, looking at as soon as you get a 50% retracement that trades, I like to draw up the opposing. So the long setup traded, I want to know where might we see some resistance in the form of the opposing short. So that's where I drew up that high to low. I had intended, we've been talking about buying puts ahead of this Fed meeting announcement that will come in essentially, I guess, next Wednesday, so about 10 days or so. And wanting to get short ahead of that meeting announcement, kind of the thing that kicked off this recent sell-off was, not super surprising, but Jay Powell speaking on Thursday. That's really what kickstarted the slide here. But from a pure technical perspective, we gapped up on Thursday morning and we traded right at the 50%. And so I actually put the bought puts, the SPY 440s at the open on Thursday, and we talked about it in the Discord chat as well. Um, was not expecting such a strong, violent move and such a big move on Thursday itself, but sometimes you get a little bit extra luck on your side. What I will say though is, the best trades do go right away. Like they go in your favor right away. I don't want to be sitting around for days on end waiting for a position to start going my way. It's important to have your exit point laid out. So if we had gotten a close on Thursday above the 61.8, so like a 45.30, I would have just closed out that put position and moved on. And I had put on two put positions at some point on the run up here. Maybe it was, I can't even remember now. But I put on the position at the close, and the next day we were bullish, and so I just got out. I'm not going to just hang on to the position and let it go against me and hope and pray that it turns around. So quick to get out, and if it does go your way, and if things are, especially like on Thursday, where they really took off in a jiffy, I took off a few contracts at the close just to lock in, guarantee big winner, and be able to hang on to the rest of the contracts with a very kind of peace of mind attitude. If we would have, gapped up on Friday and then traded all the way back at the 50% short again, well, because I took off some contracts, on a big move, at the end of a big move, you're kind of guaranteeing a profitable trade, but also allowing you to stay in the winner longer. And that's been a big thing for me as far as, looking at, okay, what can I do to stay in these winners longer? And if it's not going my way, how can I get out as quickly as I can identify that the trade is breaking down? And so by taking a little bit of profit off, and we do this, with the intraday time frame when you're trading the ES, taking that first target of 3 points is really a helpful way to limit your risk, kind of guarantee a winning trade, and then you can kind of sit back, take a deep breath if you're getting stressed out about the as soon as you get in the trade. if your heart starts pounding, that's a helpful way to be able to stay in those winners longer. So at this point, we've come all the way down to the 61.8, the negative 61.8 down here, and you know, really, if we zoom out a little bit, we have at this point, an inverted head and shoulders going back to the low from beginning of February. So we came down, we rallied. That was kind of the left shoulder. Then we came down deeper, made a lower low, and rallied to just above the uh, swing high. So they don't line up perfectly, but they're close. That's the head. And then now, at this point in time, we could round out and make up the right shoulder if we get some support here in the next few days. If we just sink lower and then break the swing low, then at that point, because the full halfway back short has failed, so like this guy here, um, that target, that negative 23% target, you know, really what I'd be looking for is that negative, that 61.8 break of the extension. So I got to zoom out even further to even see this here. So the extension from highs just before COVID to the all-time highs here, that's what this 50% is below us that you kind of see at the bottom of my chart. And so that 61.8 is what I would look at for kind of the reversal point, I guess, if you will. If we come down and break the swing low down here, that would be the next stopping point. So we'll just say, I mean, even if you want to just use 4,000 as a big round number, something as simple as that, that could be a nice targeting point. Because the Fed meeting is next Wednesday, I bought the May 6 puts, so they're expiring after the Fed meeting. My intention was to get in about 2 weeks before and then hold them through the Fed meeting. Given that we've come down so far so fast, and that the trade is already just huge, I'd be okay, taking a few more off here. Like if we sell off today at the close, we take a little bit more off, because when you do go down really really quickly, you tend to go back up really, really quickly in sort of a V pattern. And so, want to be responsible and not give back too much, but at the same time try and stay in as long as possible. So let's jump into a couple of trades from today and last week as well. So if we go to the intraday chart here, and we'll go to a 5-minute and give us some more context. First one today was a short, no surprise. But what's interesting about today is we're sort of trading what it almost, in a lot of ways, it's acting a lot more like a range-bound day. Like our breadth would be at 1-to-1 or, a more flat advanced decline line. But if you look at our breadth and advanced decline line, they're actually pretty bearish, especially the AD line. And we are not until, right about now, actually, we haven't been able to sustain. Let me clear this and redraw everything here. Haven't been able to sustain much time down at lows. So if I mark our high of the first 30-minute range, that's here, and then the low of the first 30-minute range, that's over here, and I'm putting this video out a little bit early today, so it's only midday versus later in the afternoon. But this first touch down here of lows of the day, we didn't spend much time there. We got a second touch, and then we actually rallied and broke the halfway back short, which I was kind of surprised about to see right here with such weak breadth. And then we came up to highs of the day, the top of the first 30-minute range, and also happened to be just shy of yesterday's low, a gap fill, and then came back down. And then we started to bounce again. And the halfway back short actually did come into play here. And that's what we're in at the moment. But up until now, we hadn't really seen a lot of time spent down at lows, which on a day like this with breadth so negative and the advanced decline line so bearish, you would expect more of a constant slide day like we had on Thursday and Friday. So first trade, let's go 7:15. That was, got to go to today. So this is that bottom of the first 30-minute range, 7:15. So what we had at halfway back of the day with weak breath. So that was, find it here. Yeah. So we came up to, we were just shy of that halfway back short of the day. That's this guy here, this first one. And noticing strong breath, strong advanced decline line, both to the negative. We came up, shy of that halfway back, but you could also draw a lower high to lows like this. Um, and that one did touch. So it's sort of don't want to miss out on the move if we have a big sell-off. I drew up the opposing because that's the first thing I'll do, or the second thing I do, I guess, after drawing the full halfway back. And then we broke that long really easily, and then the short looked like this. And so I ended up getting in on the right at the 50 here, and went a couple ticks in and then rolled over, got that first target for 3 points. And then I came up and ended up getting ticked out here, right at 20.25. So got taken out and just ended up with 3-point first target and then -2 on the second half of the position. So that one didn't end up really going any lower. Came back and retested the halfway back of the day. So I thought, okay, well, maybe just a little bit early. But then when we came up and we broke the halfway back short, I was kind of scratching my head, with a breadth and advanced decline line so bearish. But I did end up taking, with a little bit of reluctance, a little bit of a long. And that one was later in the morning, 7:45, and that was at the halfway back long. So the halfway back short failed here. So I drew up the halfway back long. We came up, not only did we come up to highs, but we broke through highs. We did not have a high tick at highs, which I was also surprised to see. So just based on the chart, drawing the opposing halfway back, we were trading down here at the time. So we had room to go 42, 29 and change to 42.39. That's 10 points before we even get to the opposing halfway back short. So I'm fine taking a, kind of a counter trend, if you will, or a long setup here, because I know, well, I can easily get a 3-point first target, and I can get a decent winner if we stop at the halfway back short, which we ended up doing today. And so the reward to risk is still good on the trade. And that one was a 29, 25. Right down here, kind of lined up with the larger halfway back long as well. Nice little double bottom, broke the swing high, textbook long, trailed the next 50%, and then just trailed these swing lows. And this was the swing low. I had my stop underneath and got taken out there, and then we sold off. So that was a decent, I think 3 points and then maybe 5 on the second half. And then that took us to the 90-minute mark. So, when you get a day like that things aren't quite lining up with the breadth and you would think, okay, I need to only be taking shorts. Well, I do lean on the chart and make sure that I'm just trading, what the chart is giving me as far as setups go, and I don't get so stuck into, if the breadth is negative, I can only go short. If the breadth is positive, I can only go long. On a bigger picture, yeah, I'm not going to sell my puts when the breadth is, -4, -5 to 1, and the AD line is this bearish. Hold those into the close. But intraday, we have a lot more flexibility to go long, go short, even if the larger trend might be in the opposite direction. Let's see here. Last week there wasn't much in terms of the 15-minute breakout. I just run through just a couple notes quickly here from last week. I did move my stop to +4, or let me rephrase that. I started with a -4 stop on the 15-minute breakout trade, but when we got to +10 of profit, I moved my stop to +4. And so I had a couple of +4 trades. Those 15 minutes didn't really do a whole lot, even though we had a big move down on Thursday and Friday. It was a little bit later in the morning by the time the market got going. But I did want to mention two stop outs that I had, back-to-backs, which I haven't had in a fair while, on Thursday. And they were they were close together. Oftentimes, suggest to folks if you have a stop out, get up, refill your coffee, come back, even if it just takes you 2 minutes. Just kind of get up away from the screen just for a minute and clear your head is kind of a good reset. But what I did on Thursday was not that. It wasn't necessarily a bad trade. It just might have been a little bit hasty. So I'm going to go back and mark the bottom of the 30 here. And so we had a really nice halfway back long, kind of the same setup as the second trade today, where you have a double bottom here we were at the bottom of the 30-minute range, whereas today's trade we were at the halfway back. Broke the swing high, obviously broke the opposing 61.8, and then set up at the 50% long. So that was the first one I had on Thursday. I ended up getting stopped out, and then I kind of turned around quickly as we came down and broke below the 30-minute range, and I turned around and ended up taking the next short. And really, I should have waited a little bit longer. I like when we come up. So when we break down below the 30-minute low, and then when we come back up to it, I like when the 50% lines up closer to the 30-minute low itself. This one was a little bit high. We had to trade back in a point before it traded. So I ended up taking that as a short, and I got stopped out before we rolled over. Probably a better opportunity would have been to wait a little bit longer and then wait till we're sort of the 50% is kind of just underneath the 30-minute low. So at the very least, at that point, you come down, you get a first target, and you get 6-7 point move. So you could come in and trail your stop for a little bit more gain. Not super upset about that trade, but just wanted to highlight that because I know that it does happen a lot where you get a nice setup and the trade may not work out, and you might be tempted to jump into another trade immediately. And sometimes, most of the time, it's better to just kind of sit tight for a little bit and then jump in just a little bit later. So those are my two from Thursday. Didn't really have a whole lot else last week. Actually, Wednesday there was Wednesday I'll touch on that real quick. 7-Eleven. And that was 7-Eleven. I don't even remember this one. Let's look at the notes here. Double bottom off the 30-minute low, broke the opposing. Oh yeah, so down in here, double bottom. This was the 30-minute low, and then it was this guy here, right there. Actually, no, it was a little higher. No, that's right. The first draw, like this little. So this is why it's important to draw the opposing. I find, and draw the opposing setup here. Make sure that you break the 61.8 and then draw up the next retracement. And so that long got a little bit of a run for like 4.5 points. And then Monday had a decent winner. So even though I didn't have very many trades and I had those two back-to-back stop-outs on Thursday, still ended up being a positive week. And then with those puts, obviously just absolutely crushing it. So happy about that. Next week will be the Fed meeting announcement, and this is also why it's important to kind of be patient through the weeks that might be choppy, challenging, some consolidation, because the good opportunities will come, and if you're patient enough, you can capitalize on those moves without just bringing yourself back up to break even. Or like if you dig yourself a big hole and all you're doing is filling it back in, you're not really making any progress. So it's okay to be patient. It's okay to not have tons of trades in a week, because those good weeks will come, and then when they do, you're really able to knock it out of the park. So if you like these videos, give them a thumbs up, and feel free to drop your questions in the comments below. Thanks everyone, and have a great week of trading.